One of the things I always talk to investors about is like 100% of my portfolio is not in Bitcoin. That doesn't mean that I've got a million altcoins, right? I actually have Bitcoin, and then I've got some public stocks, I've got private investments, I've got businesses I own, etc. And it's not because I've lost conviction in Bitcoin. It's just that, to your point, when you're buying Bitcoin at $1,000 or $2,000, $3,000, it's a very different asymmetric kind of risk profile than buying it at 80 or 100K. I think Bitcoin is going to go up. I think it'll hit a new all-time high. I think it'll provide a better return on the stock market going forward. But I don't think that Bitcoin's going to be 100x.
One of the strongest comparisons Pompliano makes is between Bitcoin and gold. Gold has served as a store of value for thousands of years, but he argues it lacks precision. No one knows with certainty exactly how much gold exists globally, how much new gold will be mined, future supply increases, comprehensive ownership distribution. Bitcoin solves those uncertainties through code. Pompliano is careful not to dismiss gold entirely. He emphasizes that gold is not a bad asset. Instead, he argues Bitcoin improves on some of gold's limitations. He also explains recent gold demand differently than many analysts do. According to his interpretation, central banks increased gold purchases partly because of geopolitical tensions and sanctions against nations such as Russia. Observing those events, some countries may have reconsidered dependence on foreign reserve currencies. Rather than moving from dollars into euros or yen, many diversified toward non-sovereign stores of value, including gold. Pompliano suggests Bitcoin may eventually benefit from similar behavior.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
When the world becomes uncertain, people seek out an asset that gives them certainty, and Bitcoin is the best asset to give you certainty. You know exactly what the monetary policy is. You know exactly how many are going to exist. You can actually audit on any given day how many are in circulation, who owns what, all these things. So Bitcoin is certainty in a digital world. So what happens when there's a lot of uncertainty around you is you want that safety, you want that certainty, so you go towards that asset. Treasuries or dollars used to provide that, but those are the only things in a portfolio that are engineered to lose value over time. And so what you're seeing is investors around the world are saying, I want something that is certain, I want something that is digital, I want something that is scarce, and I want something that is mutual, non-sovereign, and decentralized. And so Bitcoin is the only asset in the world that provides those things. Gold is not certain. How much gold is in the world? Nobody knows. How much gold is being taken out of the earth today? Nobody knows. What is gold's emission going to be over the next 6 months? Nobody knows. Where is all the gold? Nobody knows. So if you look at it, gold doesn't provide the same as Bitcoin. Doesn't mean gold's a bad asset. I am not a gold hater in the sense that people should not own gold. It's just that in a moment like what we just saw, where you would think that stocks would go up, that gold would go up, all these things, that did not happen. You look at who was buying the gold, it wasn't really retail investors. Actually, retail investors were selling gold in 2025. What was happening is the central banks were buying it, and they were all doing it after a Russia-Ukraine situation where the United States decided to sanction the hell out of Russia and was pretty onerous, I think, in terms of how they went after people who weren't even involved, etc. A lot of countries around the world said, wait a second, I'm friends with the United States today, but what if I'm not in the future? And so they all decided to get off of fiat currencies. Now, they didn't drop dollars and then go buy euros. They didn't drop dollars and go buy yen, won, etc. They said, maybe we just don't need as much fiat currency. And so they started to get away from fiat currencies, buy gold. Gold had a persistent non-economic bid. And so that drove the price up because people didn't care what the price of gold was. They simply were buying it because they wanted the security that it provided. Well, I think that any additional flows of capital will always help Bitcoin because it's a scarce asset. And so you have more buying than selling. Obviously, the price goes up. But I don't think that you can put all of the performance on one single buyer, whether it's Saylor and SDRC or anything else. I think that it is a confluence of events. You have a lot of businesses around the world that are saying, hey, I want to keep dollar cost averaging into Bitcoin. A lot of individuals. We now have heard that they are saying that there's going to be an announcement coming for the strategic Bitcoin reserve. Well, if all of a sudden in a couple of weeks, if we hear that the U.S. government was buying Bitcoin, then that would make this price action make a lot more sense. We don't know. Maybe it's announced that, maybe they don't. We don't know. And so I get very nervous when people start to say it's one single thing that's driving the price. Instead, I think that people were very scared back in February and early April or early March. And now they're not scared. They realize Bitcoin is going to come back, and so they're buying Bitcoin. Both things are true. I think that's why it's so controversial and people like to debate it so much, right? On one hand is having one single entity that owns a lot of the Bitcoin is usually not looked at positively from the Bitcoin community. On the other hand, a company is very interesting. It is not just Saylor that owns it. There are hundreds of thousands, maybe millions of shareholders that technically own that Bitcoin. It's just sitting in a simple pot for all of the shareholders. And so on one hand, yes, it is a centralized entity that owns the Bitcoin. On the other hand, there are millions of shareholders that all have a claim on that Bitcoin. And so both things are true. And I think what gets people very nervous is when you start to see people get a lot of influence. And people always say, like, well, what happens if they start to do things that I don't agree with? Is that good for the industry? Is it not? And so maybe a way to think about this is the words may be more important than the ownership or the holding of the Bitcoin. But look, I think Michael Saylor's done a great job with the Bitcoin community. I think anyone who says he's been a net negative is wrong, right? I think he's done a great job of understanding Bitcoin, of going out and telling people about Bitcoin, of acting instead of talking. And so ultimately, I think it's a good thing.
Another important theme is Bitcoin price appreciation. Many investors search for one explanation: institutional buying, Vesic, corporate treasuries, government accumulation, influential investors. Pompliano argues markets are more complex. Bitcoin's growth likely comes from overlapping forces: individuals dollar cost averaging, companies adding Bitcoin reserves, institutions entering markets, long-term believers accumulating, potential government participation. He warns against reducing Bitcoin's movement to one event. Markets reflect collective psychology. Fear decreases, confidence rises, capital returns. That shift itself can move prices.
Again, I think that Bitcoin itself, I've got more conviction in it today than ever before. One of the things that was very clear to me back in 2016, 2017, 2018 was I knew that I could not talk about other things if I wanted to be able to communicate the idea of Bitcoin. I had to be very focused on communicating this idea. But what a lot of people don't know is I was still investing in lots of other stuff. If you look at our venture portfolio across all of the different funds and investments I've made, etc., more of the investments are not in Bitcoin and crypto than are in Bitcoin and crypto. Now, if you think about the actual dollars that we put out, right, a lot of it went into Bitcoin. So we just didn't talk about everything we were doing outside. Now, I think it's pretty clear. I like Bitcoin. I think I've done, kind of my job as best I can to go and communicate that to the world. And so I still talk about Bitcoin a lot. But also, I think that there's other things that are going to interact with Bitcoin or be areas where people should be paying attention to. And so one of the things I always talk to investors about is like 100% of my portfolio is not in Bitcoin. That doesn't mean that I've got a million altcoins, right? I actually have Bitcoin, and then I've got some public stocks, I've got private investments, I've got businesses I own, etc. And it's not because I've lost conviction in Bitcoin. It's just that, to your point, when you're buying Bitcoin at $1,000 or $2,000, $3,000, it's a very different asymmetric kind of risk profile than buying it at 80 or 100K. I think Bitcoin is going to go up. I think it'll hit a new all-time high. I think it'll provide a better return on the stock market going forward. But I don't think that Bitcoin's going to be 100x. Nothing matters other than will the government print money. Literally nothing matters. War doesn't matter. Are they going to print money? COVID doesn't matter. Are they going to print money? What's going on in the local economy doesn't matter. Are they going to print money? Inflation, asset inflation is a monetary phenomenon. If they print more money, then that is going to drive asset prices higher. Now, what's interesting about that is we actually have an opportunity in this country to have asset inflation with consumer deflation. And people are not really ready for that, because ultimately what ends up happening is, what if we are printing money and that is driving people to put money into assets, but at the same time AI and robotics and all this stuff is bringing down consumer prices? That is an environment that we are not used to. That is not in academic textbooks, but it seems like we are inching more and more towards that. If you look at trueflation, which I think is a better economic measurement, there's housing, transport, utilities, etc. You are starting to see that deflation, the actual negative year-over-year growth. Now, if you look at the government data, that's not showing up there. And so it's a little bit of like, who do you believe? But the fact that there are some data points showing it and some don't means that we're closer to it than people probably want to admit. I think Bitcoin survives. I think stablecoins survive. I think equity infrastructure survives. And I think tokenization stuff survives. Those four areas, I think, are going to be the bulk of where all the returns are generated. Pretty much everything else that people are talking about, it's not serious. I mean, I'm walking around this conference. It's done a great job putting the conference on. There's great people here. But as I'm listening to conversations, there are still people who are stuck in 2018. So do not think things that is not going to happen. I think that it's easy in that AI is going to need some sort of assets to use. They're going to use Bitcoin and stablecoins most likely. And then also, I think that people are probably drastically underestimating how much these crypto kind of components, whether it's the actual currencies and assets or even just the infrastructure, is used for automation. So to me, AI and crypto are usually talked about as two separate industries. I've always talked about the age of automation. It's basically there's one big umbrella of automation. AI is in there, crypto's in there, there's some other technologies, but it's all about automation.
A surprising admission from Pompliano is that despite being publicly associated with Bitcoin, he does not allocate everything to it. His portfolio includes public equities, private investments, businesses, venture investments, He distinguishes conviction from concentration. Believing strongly in Bitcoin doesn't necessarily require ignoring diversification. He explains risk profiles evolve over time. Buying Bitcoin at $1,000 differs dramatically from buying at $100,000. Potential upside remains attractive, but expectations should mature as assets become larger and more established. His view: Bitcoin may outperform many traditional assets over the long term, but expecting endless 100x returns becomes increasingly unrealistic as adoption grows.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.